On the 29th of April, Enterprise Products Partners reported earnings where they missed on EPS, but they reported a massive beat on revenue. The stock went down about 5%, and when we zoom out we see that EPD stock was hammered down quite a lot at the beginning of April. And despite these results, many people stay invested or start buying EPD stock because of the massive 7.15% dividend yields. On top of that, they increased the dividends for 26 years in a row. So this begs the question, is it time to buy EPD stock after the recent drop in stock price? Well, let's dive into the recent earnings report. So right off the bat, operating income was reported at 1.76 billion, down from 1.82 billion year over year. Net income is also down year over year. And looking at the earnings per common unit, we see that this number is down as well. So we're off to a bumpy start. But looking at the gross margin, EBITDA, CFFO and free cash flow, it is actually not looking too bad. Looking at the volume, we see that most segments are up, despite one of the smallest segments, Marine Terminal, down about 12% year over year. Other than that, this looks really good to me. Moving on to the allocation of capital, we see that dividends increased 3.9% year over year in the recent quarter, and CFFO payout ratio is at 56%, which is a great number. On top of that, EPD Stock spent 60 million in share buybacks, which is also really good to see. Leverage ratio is reported at 3.1 times, where 3 times is the target. And one of the things that I really like about this company is the fact that despite the crisis periods they faced, the company always managed to pull through. To me, that's a really good sign. They are able to survive these periods and get growth back on track quickly after these periods. Looking at the volume trends, we see that segments are growing about 7 to 9% annually. To me, this looks really good. As mentioned earlier, Marine Terminal is decreasing year over year, but it is one of the smaller segments. However, let's keep our eye on that number. Looking at the balance sheet, we see that they report A credit ratings, which to me is really important. Other ratios are also looking pretty good in my opinion. Looking at the US production forecast, we see that it is expected that these markets will keep on growing in the coming years. So there's plenty of room for the company to keep on growing the business. And now that we know more about the company, let's check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. EPD Stock is a 66 billion market cap company. PE ratio is at 11, indicating they could be undervalued right now. Later in this video, I will show you my 3 price targets for EPD stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 56 billion, and in this graph we see that revenue went up and down quite a lot. This is also very common for a company in this industry. Most recently, it is increasing again. Margins are going up in the long run, and that's really important to me. With revenue being a roller coaster, you want the margins to increase at a decent and consistent pace. EPS is looking really good. In the long run, it is going up at a steady and consistent pace as well. Analysis expect that EPS will increase at 4 to 8% annually. In 2028, it is expected to see a decrease, which feels a little bit random to me, to be honest. For the revenue, analysis expect mid-single digit growth in the coming 2 years. But in 2027, it is expected to see a 23% increase in revenue, only to fall back that same amount in 2028. Again, this feels a little bit random to me. Return on assets is sitting at 8%, which is a great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at 11%, which is a really great number. It is also higher versus the 5-year average, which is a good thing. Current ratio is at 1, which is a decent number. Nothing really special to mention here, to be honest. And right now EPD Stock has 32 billion in debt. And I prefer companies that can pay down at least a big chunk of their total debt with the total cash. EPD has 583 million in total cash, so they can't pay down a big chunk of their debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run. But it has to be said that 2021 and 2022 and a big part of 2023 were a fluke in my opinion, as were 2024 returned to normal growth numbers. In general it looks really good to me, as the long-term trend is upwards. Shares outstanding are increasing in the long run, which is something that I don't like. However, most recently they started to buy back some of their shares, so I'm really happy about this new situation. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7.15%, which is an insane number. Annual payout is at $2.14 and payout ratio is at 56% based on the CFFO. So that's actually looking pretty good to me. The 5-year growth rate is at 3.65%, which is a decent number, but nothing crazy. And since the dividend yield is already exceeding 7%, I don't mind that much that the growth rate is a little bit lower. On top of that, they have increased the dividends for 26 years in a row now, which is really impressive. And if you take a look at these numbers, the dividends paid since 2015, you see that EPD did increase the dividends at a slow pace. However, in the long run, this really adds up. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a similar rate versus previous years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare EPD stock with the overall market, in this case the S&P 500. On the 5-year chart we see that EPD had a massive 156% return. And keep in mind this is including dividends. The S&P 500 also did a great job with 112%, but clearly EPD stock is the winner here. On the 1-year chart it is pretty much the same story, with EPD sitting at 13%, while the S&P 500 is sitting at a shy 10%. On the 6-month chart, it is again EPD who's beating the S&P 500, which is really interesting since the S&P 500 is sitting at a negative 5%. On the 1-month chart, it is finally the S&P 500 with the highest return. Bottom line, EPD was by far the better investment in the past 5 years. And keep in mind this is including dividends. Most recently, the S&P 500 is winning. So could this be the perfect time to buy EPD stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with the revenue growth. For the revenue growth I'm filling in 1, 3 and 5%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 10, 11 and 12. And for the free cash flow margin I'm putting in slightly lower numbers. For the PE ratio I'm putting in 10, 11 and 13. For the price to free cash flow I'm putting in slightly higher numbers. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. And right now EPD stock is around $30. I hit analyze and we see 2 green numbers. We have a low price target of $17 to $23, with a mid-price target of $24 to $30 and with a high price target of $33 to $39. To me, the mid to high price target is the most justified here, indicating the stock could be undervalued according to these numbers, but that highly depends on the numbers you believe to be the most accurate. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on EPD stock is that it comes with a few risks. Of course, you have the industry risks that are attached to this company. Next to that, debt is pretty high versus their cash position. But the fact that they can increase margins at a pretty and decent pace is something that I really like. Also, looking at the dividend, it is looking really good, with a high dividend yield and even some small growth numbers, and of course the 26 years of dividend increases. From a value point of view, things don't look that bad either. However, the stock isn't massively undervalued. So it really depends on your play if EPD stock is a great buy right now. And for now, I will keep waiting for a small pullback on the stock. Let's say $27 to $28. And to be honest, I can't wait to add this stock to my portfolio, since I really like the business. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.